Hello everyone and welcome back to my YouTube channel. My name is Pankaj and I'm a financial investing advisor. Today I will be discussing building a portfolio with a combination of ETFs which have a history of outperforming the S&P 500. So please watch the video until the end if you are interested in building a long-term portfolio using stable and growth ETFs. Let's get started. Thank you again for joining me today. As always, everything shared in this video is for informational purposes only. But if you hit that like button below, that would be a huge contribution in the growth of this channel. You don't have to pick individual stocks to get closer to your financial goals. ETFs can do the job just fine as they offer portfolio diversification. However, some funds are better than others and it's possible for a fund to be over-diversified. The best funds strike a proper balance of diversification and prioritizing promising stocks. They also align with the fund's objective. A growth fund will have more companies with high valuations and meaningful upside potential. Income funds play it safe and focus on dividend-paying stocks. Investors looking for some of the top ETFs may want to consider these top picks. My first pick is Invesco S&P 500 Top 50 ETF with ticker symbol is XLG. The Invesco S&P 500 Top 50 ETF is a proof that too much portfolio diversification can be a bad thing. This fund only holds the top 50 stocks within the larger S&P 500 and it has outperformed its larger counterpart. XLG is up by 90% over the past 5 years while the S&P 500 is up by only 72%. Since XLG spreads its capital across fewer stocks, it has larger concentrations within the Magnificent 7 stocks. More than 40% of the fund's assets are in information technology sector. The fund's top 3 stocks are Microsoft, Apple and Nvidia. These positions make up around 12%, 10% and 9% of the fund's total assets respectively. The other Magnificent 7 stocks are close behind. The fund has a 0.88% 30-day yield and a 0.20 expense ratio. It's already off to a good start and it's up by 8% year to date. Not to mention, that's better than the S&P 500 6% year to date gain. My second pick is Vanguard Growth Index Fund ETF with the ticker symbol VUG. I had talked about VUG in my other video as well. I'll provide a link here as well. The Vanguard Growth Index Fund ETF VUG is another top performing fund that has more than doubled over the past 5 years. It is at par with the S&P 500 year to date in gain. It has outperformed S&P 500 until few weeks ago. More than half of the fund's total assets are allocated towards tech stocks. The top 3 stocks of VUG and XLG are almost identical. Another Magnificent 7 stocks are also close behind. This fund offers a 0.56% yield and a reasonable 0.04% expense ratio. Low expense ratios are a signature component of Vanguard ETFs. This ETF is offered by Vanguard. Most of the fund assets are large cap growth stocks. Vanguard rates the fund as 4 out of 5 on the risk reward scale. The fund has been around for more than 20 years. This fund is rated as a strong buy with a huge upside growth potential. My third and the last pick is iShares Semiconductor ETF with the ticker symbol SOXX. The iShares Semiconductor ETF has more than doubled over the past 5 years and is up by 11% year to date. The fund invests in companies that benefit from the rising demand for semiconductor chips. Many of the stocks in SOXX have benefited from artificial intelligence, which explains the 55% gain over the past year. Nvidia is in the driver's seat and taking up about 9% of the fund's total assets. Broadcom is a close second that makes up about 8% of the fund's total assets. This fund will continue to thrive as long as AI continues to gain momentum. Semiconductor stocks can still grow even without AI since the technology is used in many devices, appliances and other products. The fund has a 0.35% expense ratio and doesn't offer complete portfolio diversification since it is mostly focusing on the semiconductor stocks. It gives investors outsized exposure to semiconductor and AI. So if the investors are seeking portfolio diversification, they should buy a fund alongside this one instead of putting all of their capital into SOXX shares. So far, the results have been pretty good anyway. Here is a summary for top 3 picks today. First one is XLG, second is VUG, and third one is SOXX. If you found this information valuable, don't forget to like, share, and subscribe for more financial insights. Until next time, happy investing.